All right, welcome to the Explainer. Today we're going to tackle one of the most intimidating documents in finance, that massive file that comes with an initial public offering, or an IPO. We're going to learn how to read it, not like homework, but like a really interesting story.
I mean, let's just think about that for a second, because that's basically what an IPO prospectus is. It's this huge, dense document where a company just lays it all out, the good, the bad, and the ugly, right before asking you for your hard-earned cash. It feels like a lot, I know, but we're going to treat it like a detective story. And our job? It's to find the clues.
So, the official name for this document is the Red Herring Prospectus, or RHP. And honestly, that name is a clue all by itself. Why red herring? Well, it comes from this old tradition of printing a disclaimer in red ink, warning investors that key details, especially the price, aren't set in stone yet. It's the company basically saying, hey, here's the whole story, but just don't get too attached to the final numbers just yet.
Now, to solve any mystery, every good detective needs a case file. For us, that's going to be the Red Herring Prospectus for a company called Shriji Shipping. Our very first clue, our starting point, is to figure out what exactly is for sale here.
A table like this cuts right through all the noise and tells us some really important stuff. First, it's a fresh issue. That just means the company is creating brand new shares to raise money, not that existing owners are cashing out. We see the face value, where it's going to be listed, and, super important, the exact dates when you can actually bid on these shares.
And here's the scale we're talking about, almost 16.3 million new shares. This is not a small deal, it's a major event for the company. But of course that brings up the next question, how much are they?
And that leads us to a classic piece of IPO jargon that you will see every single time, the price band. What on earth does that actually mean? Well, instead of just picking one price, the company gives a range, a low end and a high end. Investors like you and me, we can bid for shares at any price we want inside that band. The final price for everyone is then figured out based on how much demand there is. It's kind of like the market itself gets to help decide what the company's worth.
All right, now for our second clue. And honestly, this might be the most important part of the entire document, the risks. This is the section where the company is legally required to confess everything that could possibly go wrong.
And they don't mess around. Every RHP kicks off with a warning just like this. It is a stark, legally required disclaimer. They are literally, in black and white, telling you that you could lose all of your money. It's not just fine print. It's the front door to the most revealing part of the whole document.
And in this particular case, Shriji Shipping's risk factors section lists over 50 different categories of things that could go wrong. The sheer number tells you something. You cannot skim this section. The company has done its legal duty to warn you about everything you can imagine. And look, these aren't just vague fears. These are specific, quantified risks pulled right from the document. For example, almost 21% of their revenue comes from just one customer. I mean, what happens if that customer walks? They're also facing legal claims worth over 425 million rupees. And that employee attrition rate? Over 37%. Wow. These are the real clues that give you a true sense of the company's challenges.
Okay, so we know what's for sale, and we definitely know the risks. Our third clue, and this is a big one, is to do what every good detective does. Follow the money. Where's it all going?
This is it. This is the fundamental question every investor has to ask. When a company wants to raise millions of dollars from the public, they have to be super specific about how they're going to spend it. And that's all laid out in a section called Objects of the Issue. And this chart, well, it tells the whole story at a glance. You can see the vast majority of the money, over 2.5 billion rupees, is going straight into buying new vessels. Right away, that tells you their main goal is growth, it's expansion. A smaller slice is for paying off debt, and the rest is for day-to-day stuff. This isn't a guess, it's their stated plan.
So try not to think of this section as just a budget. It's so much more. It's the company's strategic roadmap, and it's funded by your potential investment. It tells you if they're all in on aggressive growth like we see here, or if maybe they're trying to play it safe and clean up their balance sheet.
Okay, that brings us to our final clue in the Shriji Shipping case file. It's time to meet the players. You know, an IPO isn't just one company doing its thing. It's a huge production with a whole cast of characters, and the RHP introduces you to every single one of them.
This table breaks down the key roles you got to know. First, you have the company itself, Shriji Shipping. They're the issuer. Then you have the book-running lead managers, which is the fancy term for the investment banks that are basically running the whole show. And finally, the registrar, who has the massive job of handling all the applications, allocating the shares, and sending out refunds. It's important to know who's doing what. Now, beyond that core team,
there's another group you'll hear about. They're kind of like the VIPs of the IPO world, and they get to make their move before anyone else. So who are these anchor investors?
Anchor investors are the big fish. We're talking huge mutual funds, major financial institutions. They get invited to buy a massive chunk of shares the day before the IPO opens to the rest of us. Why does this matter? Well, their participation is seen as a huge vote of confidence. If the big, smart money players are jumping in, it sends a powerful signal to the market that this is a solid deal.
So, there we have it. We've pretty much cracked the case of the Shriji Shipping RHP. Now, let's put together an investigative toolkit that you can use for any IPO document that comes across your desk.
Here it is, your simple 5-step detective checklist. 1. The offer. What's for sale? 2. The risks. What are they confessing? 3. The money. What's the game plan? 4. The players. Who's on the team? And number 5, which is critical, the financials. What's their track record? We didn't do a deep dive on the numbers today, but trust me, years of audited financial statements are in there, and they tell a story all on their own.
And this right here is the ultimate takeaway. The Red Herring Prospectus might look like a sales pitch, but it is so much more than that. Because of securities law, it's a legally binding confession. The company has to tell the truth, the whole truth, and nothing but the truth, or they face massive consequences.
So I'll just leave you with this thought. A company has just handed you a 400-page document detailing all its biggest flaws and exactly how it plans to spend your money. When you really think about it, what other sales pitch in the world is that honest?